Hi, welcome back. As promised, we're going to discuss the tractor sales numbers. Escorts came out with their numbers yesterday. The tractor sales fell 4.5% year-on-year in November, but the fall was not as bad as its peers like M&M, which saw a 19% fall. To find out if they gained any market share last month and to give a sense of the outlook, we have Bharat Madan, the group CFO at Escorts. Mr. Madan, good morning. Thanks for joining us. We started with that. Your sales fell about 4.5%, but peers like M&M saw a 19% fall. Did you outperform the industry in the sense of better market share this time? And how is demand looking at the moment?
Well, obviously, I think looking at the number looks like we have done better than the industry numbers. But the overall industry degrowth this month has been about 13% and on the domestic side, and our degrowth has been about 3.5%. So definitely looks like I think certain pockets where we are doing better, I think, within the industry. But yes, overall demand scenario looks like it's picking up now. I think if you look at the numbers, I think in the entire festive season, which has gone September to November, the retail numbers and overall numbers have been more or less flat compared to, I think, the last year. So I think it's a good trend compared to where we've seen in the first 5 months of the year, where we've seen double-digit decline happening. So we are hopeful that things are picking up now, and probably the next quarters we'll see some sort of growth numbers coming back to the industry.
Okay, but Bharat, I have still not understood. If you have not done as badly as the industry, how should we look at it? Is this sustainable? If it is still negative, so will we start getting positive numbers at all?
No, I think if you look at the trend, Lata, I think if you look at the first quarter, the industry degrowth was double digit, almost 15%. The second quarter, we had a slightly better number. The industry growth came down to about 10%. And this quarter, it looks like the industry degrowth will be 7-8%. And maybe Q4, we're looking at a positive traction coming back to the market. So I think if the recovery is visible, obviously it's not coming in a drastic manner overnight. So obviously it'll take its own time. I think by the time you see the things really moving up in the ground. But yes, I think looking at the good season which we have, I think the good monsoon which we had, and it's likely that the Rabi crop is likely to really be better. So hopefully in February, March month, we'll see a good recovery back in the industry.
You know, we are seeing a rise in food prices. It's not just onions now, it's all vegetables, maybe even pulses. Maybe this means a little more money for farmers. I do not know. You're best placed to say that. What are the walk-ins at your retail outlets like? Are they looking a little better? And as well as you say, the Rabi harvest is all slated to be better. Give us a picture of how many people are walking in.
Yeah, so I think if you look at the crops also, I think the crops are also very region-centric. So wherever there are certain crops where you're seeing a better price recovery happening there, so you're seeing those regions are doing better now. So you have markets like MP, Chhattisgarh, in the central India after last 3 years now, this year they've shown a very smart pickup. So the prices there at the crop are also really doing better. So we definitely see wherever those regions are impacted now, the markets were seeing growth like, to some extent Punjab or MP, Chhattisgarh, Rajasthan. So these markets have shown a pickup, now smart pickup, because the crop price is moving up. Now if you really look at the tractor industry correlation also, I think very directly correlated to the food inflation, and the higher the food inflation, the better purchasing power definitely has a positive impact on the industry numbers. So we are hopeful, I think, as the price movements are happening now, the MSP have been announced, which is better than last year. So hopefully on the grain side also we'll see the recovery happening, and that's why we are really hopeful that March quarter will actually see a pretty positive growth number this time.
So earlier you had guided that FY20 may end in the negative for the industry. Would you want to change that guidance now?
No, we still expect this will be negative. If you look at the first 8 months now, the industry degrowth is close to 1100%. So even if you see a single-digit recovery happening in Q4, which is likely maybe 5-6% growth, still I think you will expect this whole industry for the full year will end up at 7-8% degrowth. So it will not be a positive scenario for the full year.
Okay, so 7-8% degrowth for the industry is what you're expecting in FY20. What is the market share now, and have you gained any market share lately?
Yes, if you will look at the season period, definitely September to November, the gain has been pretty decent for us, and on an 8 months YTD basis, it's been marginal gain, 30-40 basis points above over last year. So, but normal the market share gain do happen in the last 6 months. So definitely we see a good recovery should happen, I think, by March.
Okay. Are you facing any major competition? I mean, are you seeing pricing getting hit quite a bit? Because if you look at your margins, the agri division margins, they've fallen substantially to 10% in Q2 versus, a peak of 15% that you enjoyed same time last year. Should we expect this margin pressure to continue?
No, I think in the first 6 months, like I said, there are two reasons. One obviously was the degrowth which happened in the industry. As a result, the sales volume had actually gone down. And second, there was a major production cut which the company had to undertake to cut down its own inventory levels. So that is a second impact. So I think in the second half, both the problems are not there now any longer. So hopefully in the second half, you'll see a better margin recovery happening. So against whatever we've seen the 10% around in the first half, at least we expect at least 200, 300 basis point recovery will happen in the margin in the next 6 months.
Inventory is back to normal, completely drawn down?
Yeah, pretty low. Even in November, we actually ended up with the lower inventory, even lower than, it's less than 3 weeks now, I think, in the channel.
Okay, can you add a word on your construction business?
So construction continues to be seeing bit of, I think, problems here because the financing issue, I think we're still seeing in the NBFC space. So the industry has actually not done well in the first 6 months also. They had declined by close to 25-26% and the similar decline continues even now. So we don't see really a good recovery happening there at least in the next 3-4 months also. Maybe the whole year also will end up somewhere around, I think, high double digit degrowth is 25% plus.
Okay, all right. Thanks a lot for joining us, Bharat. We've run out of time. So that's the expectation from Escorts. They're saying the demand is picking up a tad bit, but still for the full year, they're expecting a 7 to 8% decline for the industry. So far, the industry decline has been about 13%. But let's take a look at the financials posted by Escorts in the past few years. It's been a good few years for the company. In fact, between FY18 and 19, the revenue pickup has been substantial. Next is Escorts' profit performance in the past 3 years. It's seen a good improvement as well. The EBITDA posted by Escorts will come up in just a bit. From 324 crores in FY17 all the way to 750 crores almost in FY19. And finally, the company's EPS, earnings per share in the last 3 years, substantial improvement there. We'll take a quick break on that note. Up next, Mahindra Pratap, the chairman and managing director of IRCTC, will join in to talk about how the business is panning out and the outlook for 2020.